This LOS is describe how securities, contracts, and currencies are traded in quote-driven, order-driven, and brokered markets. Secondary security market and contract market structures. So we're going to look at quote-driven, order-driven, brokered markets, and call markets. Okay? Quote-driven markets. Worldwide, most trading other than in stocks takes place in quote-driven markets. Almost all bonds and currencies and most spot commodities trade in quote-driven markets. Traders call them quote-driven or price-driven or dealer because customers trade at the prices quoted by dealers. Depending on the instrument traded, the dealers work for commercial banks, for investment banks, for broker-dealers, or for proprietary trading houses. Quote-driven markets also often are called over-the-counter OTC markets because securities used to be literally traded over the dealer's counter in the dealer's office. Now most trades in the OTC market are conducted over proprietary computer communication networks by telephone or sometimes over instant messaging systems. Okay? So dealers provide the liquidity in quote-driven markets. Public traders as well as dealers provide liquidity in order-driven markets. So order-driven, rules are used to match buyers and sellers, price and time. Order-driven markets arrange trades by ranking orders using precedence rules. The rules generally ensure that the traders who provide the best prices, display the most size, and arrive early trade first. Continuous order-driven markets price orders using the discriminatory pricing rule. Under this rule, standing limit orders determine trade prices. Okay? In a brokered market, the broker finds a counterparty for a trade. Brokers help people trade unique instruments or positions for which finding a buyer or seller is difficult. And finally, with call markets, matching buyers and sellers in call markets is easy because the traders or their orders come together at the same time and place. Finish this LOS with a quick practice problem. A call market is least likely characterized as a market that A, with bid-ask prices posted by dealers, B, where buy-sell orders are cleared at a single equilibrium price, or C, with participation by a small number of active investor traders. Okay, for this question, I just wanted to remind you that we're looking for the least likely, so we're looking for the false. So I put that in bold and red here, okay? So the answer is A. In a call market, traders, investors indicate their bids and asks for stocks, and they are not posted by dealers. Also, a call market is not a dealer or quote-driven market. Just going to finish this LOS by showing you some functionality in the ebook. At first, I didn't like the ebook because I only used text back when I wrote the CFA, but after a while, I've grown to like it for some features and functionality. Number one, you can highlight things and go back. Number two, when you're looking for something, you're doing a question and you say, well, geez, I didn't see that in the text. One of the things that I like to use now is the search function. And so I just showed for here, it's like, oh, where's call market in the text? Well, I can type in call market and I can search the current book, and then I can sort through until I find it. It's going to highlight, in this case, it's going to highlight too much because it's highlighting market, but I will find the call market, and it is here. It was under the trading sessions, so I'm just going to read that. Markets are organized as call markets or continuous trading markets. In a call market, trades can be arranged only when the market is called at a particular time and place. In contrast, in a continuous trading market, trades can be arranged and executed anytime the market is open. Buyers can easily find sellers and vice versa in call markets because all traders interested in trading are present at the same place and time. So call markets thus have the potential to be very liquid when they are called, but they are completely illiquid between trading sessions. In contrast, traders can arrange and execute their trades at any time in a continuous trading market, but doing so can be difficult if the buyers and sellers are not both present at the same time. Okay? So most call markets use single price auctions to match buyers and sellers. In these auctions, the market constructs order books representing all the buy orders and all the sell orders. The market then chooses a single trading price that will maximize the total volume of trade. Okay? So it says here, call markets are usually organized just once a day, but some markets organize calls at more frequent intervals. Many continuous trading markets start their trading with a call market option. Okay, so then again, as we can see, there's a blue box example, and these blue box examples are so important. Now, it's not organized as a multiple choice question, but the information that we get out of them is very key. So we can see call markets and continuous trading markets. What is the main advantage of a call market compared with continuous trading? What is the main advantage of continuous compared with a call? So the solution number one, by gathering all traders to the same place at the same time, call market make it easier for buyers to find sellers. And for solution number two, in a continuous trading market, a willing buyer and seller can trade at any time the market is open. In contrast, in a call market, trading can only take place when the market's called. Okay, so again, just finishing the LOS with that little tip is that if you get a question wrong, I always tell candidates, go back to the book, go find it in the curriculum. Okay, and a quick way to do that is to use the search functionality. Type in 2 words from the question. It'll highlight a bunch of stuff. Look for it, read it, and you'll usually uncover 2 or 3 more factoids. And then if you see something like that on the test, you'll be in a good mood because you've spent the time really going through the text. Okay, with that, that's the last for this LOS. Thank you.